So, what does it mean to be a move-up buyer? Stay tuned. I'm going to tell you all about what being a move-up buyer is on this week's episode of the Clouse Corner. Hey everyone. So you may have heard this term before, move-up buyer, but what does it really mean? Well, a move-up buyer is someone who originally owned one place but has either outgrown or wants something different, and so then they either sell that place or reinvest their money into a new place. There are a couple different ways that you can be a move-up buyer. One way is to sell the place you currently own and use those proceeds to buy a new place. Typically, it's a larger place. If you're a move-up buyer, it implies that you're buying a bigger place or something completely different. Whereas a move-down buyer is usually someone who used to have children that have moved out and they're downsizing from what they used to live in. As a move-up buyer, let's say you originally purchased your home for $100,000 and now it's worth $200,000. So when you go to sell it, you're going to net $100,000, hypothetically. So then as a move-up buyer, what you're doing is you're taking that additional $100,000 that you got in profit off of your first home and you're reinvesting back into your second home as your down payment. So you're using that $100,000 as your down payment on your next home. This is essentially what move-up buying is. You're taking the proceeds from one home and you're reinvesting it in a larger home that might be worth more money or be a completely different type of home because you've outgrown or no longer need the type of home you were in before. Now, there is also a different way to be a move-up buyer as well. Let's say that first home that you originally owned is now worth $200,000 and you bought it for $100,000. Well, you can keep that home. Let's say, for example, you wanted to rent that home out and go buy a new home. So as a move-up buyer, you might take out a home equity line of credit, which is basically when the bank gives you a line of cash based on the value of your home. So you might only owe $95,000 on that home because you bought it for $100,000, but it's now worth $200,000. So maybe the bank is willing to give you $50,000 in a home equity line of credit. You can then take that $50,000 and put it towards your next down payment of your next home, your move-up home. And then if you keep that original home and rent it out, you might be able to break even on the mortgage or maybe even net a little bit of money. So that's also a way that you can be a move-up buyer by keeping your first home as an investment, renting it out, maybe Airbnb-ing it, and then move up and buy the next place through that additional money that you got out of your home equity line of credit. So those are a couple ways that you can be a move-up buyer. Move up implies that you're moving from one home to a new home based on different needs that have changed or new things that you might want in a home. So hope that helps. That's how you become a move-up buyer. If you have any questions or want to know about your personal situation, how we can help you buy or sell, don't hesitate to reach out. You can call, text, or email us anytime. Please subscribe and like our channel on YouTube.